After a downturn for the past couple of years, analysts are expecting natural gas to make a comeback in 2025. Here to talk about the details and share three of his picks in the natural gas industry is MarketBeat analyst Thomas Hughes. So, Thomas, let's talk about where natural gas has been for the past few years, at least in the US.
Yeah, it's been trading at pretty low levels for the past couple of years, well off of its highs. That's caused by ramping production capacity. So there's just a lot of natural gas available. But the silver lining is that the low prices of natural gas plus increasing infrastructure have demand on the rise. So there is an upturn expected in 2025. We're not going to reclaim the past highs, but there is going to be a significant gain this year, and that will help drive profits for a lot of these companies.
Yeah, what's some of the main factors driving the increased demand potential for natural gas?
A lot of it's industrial. Industries are trying to decarbonize and to shift to greener energy sources, and natural gas is critical to that.
So, those are some of the reasons why analysts are bullish on natural gas in the new year. But why now? Why will 2025 be the year that this industry finally starts to see some returns?
It's kind of reaching a critical mass. We've been ramping production for a long time, but at the same time, ramping capacity to process it and ship it. And businesses at the same time have had to work hard to be able to even use it and to gain access to it. Critical mass has been reached in which the infrastructure and the ability to use natural gas is catching up with the supply. And so that's going to drive a demand boom.
Yeah, we've already talked about this on the channel too, that energy in general is going to see an increase in demand in 2025. We're going to share your three top picks for natural gas investing in 2025. But first, take a look at this special report on 7 energy stocks that could see a lot of growth this year. You can scan the QR code or click the link in the description to get that free report on marketbeat.com. Thomas, let's get to your three picks in the natural gas sector. Which is your first company that you expect to see a lot of growth in 2025?
Well, my first pick is Cheniere, and it and my other picks are well positioned because it's more of a middleman. Its profits are tied to a degree to natural gas prices, but more so to the volume that's processed. And the critical factor here is that Cheniere is an exporter. And so, on top of the increase in prices and strong demand, U.S. exports are expected to rise by nearly 20%. That's awesome news for Cheniere. So we're going to see a big ramp in revenue, improvements in cash flow, and the ability to sustain capital returns. Now, the one thing that investors should be aware of is that Cheniere's earnings per share are probably going to fall this year, but that's because of capital spending projects that include improving its ability to supply natural gas. So that is a long-term bonus, will increase capacity. Also, the impact to earnings will fade quickly, and then earnings capacity will actually be improved.
Yeah, lots of high dollar investments into the infrastructure for this industry and this sector for sure. Let's get into Cheniere's stock chart a little bit. Where is the stock trading at right now, and what do analysts think this company could do in 2025?
Well, right now, Cheniere is tickling some long-term highs. The analyst sentiment is pretty bullish. Right now, the stock is trading in alignment with the consensus, so we can assume fair value, but the sentiment trend is very bullish, and we're looking at about a 30 to 35% upside at the high end of the range.
And that's a great return for the new year. Let's get on to the second pick of a natural gas company you expect to see a lot of growth this year.
Right, that's Kinder Morgan. It's one of our largest pipeline operators. They've got nearly 80,000 miles of pipeline and the infrastructure to support it. They can collect, liquefy, ship natural gas all over the country, and the Gulf is one of their key terminals. So they're also well positioned to benefit from the boost in U.S. exports. Kinder Morgan is a solid cash flow producing company, so the capital return is pretty critical to the investment. With Cheniere, it's more about share repurchases. For Kinder Morgan, it's more about the dividend. Right now, the dividend is yielding more than 4% and is expected to continue growing on an annual basis. So that's a pretty safe yield this year.
Yeah, this chart also seems to be heading in the right direction, much like Cheniere.
Right. The stock price got a pretty big lift in the second half of 2024. That was aided by improving analyst sentiment. Again, we're looking at the stock trading kind of near fair value in alignment with consensus at the current price points in early January, but the revision trend is very bullish. The freshest targets are much higher, and we're looking at a 15, 20, 25% gain by the end of the year.
Still very solid for anyone looking for a good investment this year. Some investors don't like to pick individual stocks, and it looks like you've got a great option for those who maybe are more ETF investors.
The Alerian MLP ETF, AMLP, is an ETF targeting America's LNG middleman infrastructure. It's well positioned to see gains this year. It's also a high yielding stock. It's yielding near 6% early January. So I would expect to see it continue to trend higher along with these other names.
What are analysts saying about this ETF?
Well, it's kind of hard to find analyst commentary about a specific ETF. They tend to track the sector or the stocks more so than the ETFs. But the chatter regarding the industry and these stocks is bullish. We're looking for increasing revenue, improving profitability, and solid capital returns, including share buybacks, to continue lifting the stock over the coming year.
Now, let's talk about getting into this stock right now and a price point for investors if they want to get into this ETF.
Right. So right now it looks like this ETF has pretty solid support along the 30-day moving average. So I would look for it to pull back to or just below that moving average for entry points.
All right, so that's wrapping up your top three picks. Now, for all of these picks, really kind of sector wide, talking about natural gas, are there any risk factors that could change that bullish outlook on this sector?
The outlook for natural gas is pretty bullish for the next 2 to 3 years. But getting beyond that for really long-term investment, the outlook's a little sketchy because there is an expectation for the electrification industry and sustainable renewable energy to also reach a critical mass at some point in the future, which is expected to cut sharply into demand for carbon-based energy. But the shift to renewables is kind of slow, so it's questionable whether or not that longer-term outlook is right. So the big risk is that eventually the natural gas stocks will top out and then they could crash pretty hard after that.
Would you look at investing in natural gas, like these three stocks you talked about today, as a shorter term investment or something that you buy and hold long term?
And this is a buy and hold for 2025, probably for the next 2 or 3 years, but it is a shorter term investment, but still long term in the sense of a trade. We're not looking for this to play out over the course of a few months and then to hit a bust, but to last for at least another year, 2 or 3 years before hitting a top.
Some great information for investors to consider today, Thomas. Thank you so much for your time. And thank you for joining us here on MarketBeat. Check out some of our other content. We put a link to our recent energy industry video we also did just a couple of weeks ago. Check that video out. Let us know what you think in the comments. Thanks again for joining us. And as always, happy investing.